Hi, thanks so much for joining our webinar, and we are going to get started. Welcome to Greening Your Finances. My name is Gigi Norcross, Vice President of Business Development for Green Century, and I have the distinct honor of moderating today's webinar. Before I introduce our panelists, we'd like to run through a few housekeeping items. Each panelist will present for 10 to 15 minutes, and only the presenting panelist will turn their camera on during their presentation. However, we still recommend that you use the speaker view on Zoom. We definitely encourage questions. Please use the chat feature for your questions and feel free to pose questions at any time during the webinar. We will answer questions in the chat when we can, but we will also reserve time at the end of our webinar for a Q&A session. Please note that one of our very senior members of the Green Century team will be managing the question and answer chat. So if you hear from Erin Gray, know that she's a real person at Green Century. She's been with us since the early 2000s, and she will help to make sure that your questions get answered either in the chat or helping us to answer them live when we get to the Q&A session. Okay, so on to previewing our agenda and introducing our panelists. We can move on to the next slide. Today's webinar features three sections. The first will be covered by Tony Dutzik, who is Associate Director and Senior Policy Analyst with the Frontier Group, and he'll explain a little more about what the Frontier Group is in his presentation. Tony is going to set the stage for our webinar today by talking about the harms that are done to the environment courtesy of the fossil fuel industry. Kathy Becker is our second speaker, who is the Responsible Finance Campaign Director at Green America. And Kathy will be talking specifically about how you can green your choices in banks, credit cards, and insurance products. Leslie Samuel-Rich will round out our webinar today. Leslie is the president of Green Century Funds, and Leslie will be speaking to how you can align your environmental concerns and values with your investments, with an emphasis on divesting from fossil fuels. So that's our lineup, and let's get to it. Tony is first up.
Hey, thank you, Gigi, for the introduction, and thanks to all of you for attending. We can go to the next slide. As Gigi said, my name is Tony Dutzik, and I'm the Associate Director and Senior Policy Analyst at Frontier Group. Frontier Group is a research and policy organization whose mission is to provide information and ideas to build a healthier, more sustainable America. You can find out more about us by checking out our website at frontiergroup.org or by following us on social media. We'll also be dropping a few links to some of our reports and resources into the chat at the end of my presentation. And as Gigi said, I'm here to talk with you today about the environmental problems caused by fossil fuels. We are all here presumably because we care about the environment and want to make it better. And when many of us hear these days about fossil fuels, our minds jump immediately to climate change. And there is a good reason for that, because climate change is an existential threat that poses challenges to us all. But there is much more to the story than that. Climate change is just the tip of the melting iceberg when it comes to the impacts of fossil fuels on our environment, health, and safety. And we'll talk about a few other of those impacts in this presentation today. Next slide. So oftentimes when we talk about the impacts of fossil fuels, we tend to talk in terms of statistics, and I will have some statistics to share with you over the course of this presentation. But I think it's oftentimes just as valuable to talk in terms of stories, because all of us, or most of us, I think, have some story, some way in which our lives or the lives of people that we love have been affected by pollution from fossil fuels. Maybe it's a nephew or a niece that had an asthma attack on a particularly smoggy day. Or maybe it's a special landscape that you love that has been affected by the construction of fossil fuel infrastructure. Or maybe it's just the experience of having watched an environmental disaster like the Deepwater Horizon oil spill take place on TV. All of us have these stories. Here's my story. So when I was 11 years old, my family moved to a new house right outside of Pittsburgh, Pennsylvania, where I grew up. And that is an area that had extensive coal mining in the 20th century, the early 20th century. If you look at the map, that yellow arrow is pointing to where my house was. The pink area is area that had been mined. And I remember when we moved there, taking a walk along our local road and looking off to the side of the road at the creek that was running beside it. And that creek was a shade of fluorescent orange that I hadn't seen in nature before. And that orange was from acid mine drainage from those abandoned mines. Now, here was a mine that had closed down decades earlier. The coal from that mine had been dug up and burned long before and was still having an impact on our environment, even at that time, decades later. And to me, that was a reminder that the decisions that we make today about our use of resources and where we invest our time and our money and our energy can have impacts for generations to come. Next slide. So the key points I want to leave you with today are, first of all, that fossil fuels are dirty and dangerous sources of energy, that they create pollution at every step of their life cycle, and that a future with dramatically reduced fossil fuel use is possible. Next slide. So what do I mean when I say that fossil fuels pollute at every stage of their life cycle? We tend to think these days, especially when we think about climate change, of pollution happening at the end of the life cycle, when we burn gasoline in our cars or gas in our homes. But that is at the end of a very long and dangerous life cycle that begins with the pollution and disruption caused by mining and drilling, continues through the refining and processing of raw materials into usable fuels, extends through to the transportation of those fuels around the country and around the world, and concludes with the combustion of those fuels and the disposal of the waste products. Every step in that process, every step, creates the opportunity for fossil fuels and the waste products associated with them to find their way into the environment. Next slide. So let's talk about what that means for us practically. The most obvious problem, of course, is the role of fossil fuel burning in creating climate change. Burning fossil fuels produces about 3/4 of America's greenhouse gas emissions, and that doesn't include other emissions of greenhouse gases from other parts of the fossil fuel life cycle. It doesn't include methane leakage from oil and gas systems and from coal mines, and it doesn't include emissions from all of the energy that we use to extract and transport and process fossil fuels in refineries and move it along our highways, all of which themselves make additional contributions to climate change. Next slide. Burning fossil fuels also creates air pollution that poses an immediate risk to our health. Particulate matter and ozone pollution from fossil fuel burning can cause asthma attacks and raise the risk of premature death. And many components found in fossil fuels are actually toxic in and of themselves. Every year, it seems we learn more about the health impacts of fossil fuel pollution, and the news always seems to get worse. A 2018 study, for example, estimated that roughly 350,000 people in the United States die prematurely each year due to exposure to particulate air pollution from fossil fuel burning. That's just one pollutant. There are many others that are also associated with producing and burning fossil fuels. Next slide. Fossil fuels also jeopardize the health of our waterways. We extract dangerous fuels, sometimes from halfway across the globe, and we transport them by ship and pipeline and truck and train to refineries, and then again to our local gas stations or power plants. The opportunities along that trail for spills and leaks are numerous, and the impacts on waterways can be devastating. And the threats aren't just limited to oil and oil spills. The life cycle of coal creates the potential for acid mine drainage and also for the spillage of coal ash that is stored at power plants into waterways. The photo that I've included here is from a coal ash spill that took place a number of years ago in Tennessee, when a coal ash impoundment located next to a river burst, spilling its contents into local rivers. Not only did this event devastate the local wildlife and ecology, but the cleanup effort after that disaster led to, or was believed to have led to, numerous illnesses and even deaths among people who worked on the cleanup. So a huge and devastating impact on our environment. And there are indirect impacts on waterways as well. So fracking for gas and oil creates large volumes of wastewater, which then need to be dealt with, some of which can find their way into our groundwater supplies, and some of them find their way into our surface waters as well. Next slide. The fossil fuel system also consumes vast amounts of land, with roads, pipelines, and other fossil fuel extraction and transportation infrastructure fragmenting wildlife habitat across the country. If you travel over or through the West, you see this with roads and pipelines crisscrossing large areas where animals and wildlife traverse. Next slide. In addition, fossil fuels, especially oil and gas, are dangerous to transport and store. A few years ago, we analyzed federal pipeline safety data and found that a significant gas pipeline incident occurs somewhere in the country on average of every 40 hours. The very worst of those incidents have claimed lives. Rail transport of oil also creates the possibility for accidents and spills that cause death and injury. Next slide. There is, however, good news. We have the technology and the resources to eliminate much of our use of fossil fuels starting today. Every state in the United States has the technical capacity to produce as much electricity from renewable energy as it currently uses, and many states have the capacity to produce much more. Renewable energy technology continues to improve in price, performance. The rooftops of our homes, schools, churches, warehouses, and superstores have the potential to generate large amounts of clean energy right in our communities. And electric vehicles, batteries, and other technologies are making it possible for us to use that clean electricity in more of our lives. No form of energy is entirely without environmental impacts, but renewable energy provides us a pathway to a sustainable, resilient, and healthy energy system that fossil fuel dependence does not. But let's not kid ourselves. The fossil fuel industry has an extremely lucrative business model and is acting in ways that suggest that it wants to continue to have that business model work for many years to come. To make the transition to the cleaner future that we know is possible, we need to do everything we can, including educating ourselves, our friends, and our neighbors, and investing our time and hard-earned money in making that transition a reality. Next slide. So if you'd like to learn more about the problems of fossil fuels and also the potential for a clean energy future, you can check out the resources at our website of frontiergroup.org. We're going to put a few links in the chat to resources that might be particularly useful or that reference some of the data that we talked about in this presentation. And again, thank you so much for coming out today, and look forward to your questions.
Thank you very much, Tony. Tony's remarks very much set the stage for the rest of the webinar, which is greening your finances. And we have two experts in that very area to talk about different ways in which you can make your money work for the planet. So first up is Kathy Becker from Green America. So I'll turn it over to Kathy now.
Great. Thank you so much, Gigi. And as Gigi said earlier, I'm the Responsible Finance Campaign Director at Green America. We work with banking, credit cards, insurance, and investing. Next slide, please. So we often think of our power as activists, as voters, as consumers to use our money to make change in society. But we don't often think about the things we have to do every day, our bank accounts, our credit cards, our property insurance, and our investing. But you can use those aspects of your finances to make a difference to struggling communities, to how corporations conduct themselves, and to the environment. That is possible. Next slide. So I'm going to be covering banking, credit cards, and insurance, and Leslie's going to be covering investing. And so one of the main differences between the two is with banking, credit cards, and insurance, you put your money in somebody else's hands. and then they can do what they want with that money. And that what they do with it might align with your values or it might not. So your job in those three cases is to find the right companies, the right banks, the right credit cards, the right insurance companies to do business with, that they're going to use your money in a way that does align with your values. With investing, you are in charge of your money. You decide where it goes. You may have a financial advisor. And in a little bit, I'm going to put some links up of Green America has a lot of financial advisors in our Green Business Network that do understand responsible and sustainable investing. But basically the choice is yours, even if you have a financial advisor. So you want to understand how that investing works. And Leslie's going to cover that piece. So next slide. So first I'm going to start with banking. So next slide. So where you bank matters. And so first you need to understand just how banks work. So if you put your money into a savings account in a bank, your bank can use that money pooled with a lot of other people's money to make loans. And they make loans to people and businesses. And then those people and businesses pay back the loans with interest. And the banks pay you interest for the privilege of using your money. It's just that the banks pay you a little less interest than they're getting from their borrowers, and that's how they stay in business. Next slide, please. So there's a difference. Not all banks are alike. On the one side, we have our very large mega banks. These are the household names like JP Morgan Chase, Citibank, Bank of America, Wells Fargo. They loan, they're primarily Wall Street banks to loan to major corporations, international corporations, and they disproportionately lend and underwrite fossil fuel projects. The Banking on Climate Chaos report tracks this and has found that the 60 largest mega banks in the world have lent almost $7 trillion to fossil fuel projects since the Paris Agreement. And over $2 trillion of that is from the 9 largest US mega banks. But in the United States, we also have a lot of community banks and credit unions. And a lot of these are mission-driven banks. Their mission is to serve their communities. So what they lend to is small businesses, to affordable housing, mortgages, social service agencies, schools, environmental works. And some examples of those banks are members of our Green Business Network, Beneficial State Bank, Amalgamated Bank, Self-Help Federal Credit Union, and the Clean Energy Credit Union, which is entirely online, but their purpose is to lend to people to help with installing renewable energy like solar panels or buying an electric vehicle. Next slide. So tomorrow, as it happens, Green America has a really great resource that I'm very excited about called our Get a Better Bank Map. This website will be live tomorrow. It's going to list over 3,000 financial institutions, banks, and credit unions with over 17,000 locations nationwide. And these are the mission-driven banks I've talked about. They have to fit at least one of the criteria that are on this slide, things like they have to be a community development financial institution or a minority depository institution or a B Corp bank. Many of them have several of those memberships and certifications. So you can find it at getabetterbank.org. The site is not live today. It's going to launch. We thought about launching it today, but decided to wait until tomorrow, being that it's April Fool's Day, and we wanted this out on a day when people weren't making a lot of jokes online. So next slide. We also have on that site and on our main website our 10 steps for breaking up with your mega bank. I won't read every one of these right now. You can see this in the slides that we will send out later and the recording. But we just basically break it down it's a little bit of a process to move from one bank account to another bank account. You have to know what your automatic deposits and withdrawals are and move those one at a time. But we do want people to tell their old bank why they are moving. And encourage organizations that you're involved with to also make the switch. Next slide. Okay, next up is credit cards. And where the fees to these cards go matters. Next slide. So to understand how credit cards work, you want to understand how the issuers make money. There's the annual fee, which is the fee you pay every year to use the card. Not all cards have this. There's the interest fee, and those can be quite high. That's if you don't pay off your card every month and you carry a balance from month to month. And most Americans do, and Americans have very high credit card debt. But those interest fees also go to the issuer. And then there's the transaction fee, and that's invisible to most of us just using the card because the merchant pays it. And it's typically around 3% of the purchase price. Of that, some of that goes to the issuer. Some of it, if you have a rewards card, may come back to you in the form of cash or points or some kind of rewards, but the rest of it will go to the bank that issued the card. Next slide. So you also, for a credit card, need to understand branding versus issuing, and this is not obvious. Sometimes they're the same. The branding is usually on the front of the card. So in the example seen here, this is an Amazon branded credit card. It could be a store card, it could be an affinity card, such as if it helps support a nonprofit, or it could be the name of the bank that's issuing the card. You can usually find the issuer on the back in small print at the bottom. And in this case, the issuer is the JP Morgan Chase Bank, who happens to be the #1 funder of fossil fuels in the world. So the person that has this credit card might want to look into getting a different credit card issued by a different bank, because that's where all those fees I just talked about, that's who those fees go to. And if they're a big bank, they are disproportionately being used to fund fossil fuels. Next slide. So we have a guide on our website, and we'll have the link for that. So first you want to, if you can, find a community bank or credit union, one of the mission-driven banks. You can use our bank map. There's some other resources out there. And you want to find one that issues its own credit card. And then that's the bank that will be getting your fees, and they will be using the money for your community to help build your community. But if they don't issue a credit card, you'll have to look elsewhere, or if they offer a credit card outsourced. Some of them do outsource their credit cards, and a lot of them outsource them to an institution called Elan Financial, which is owned by US Bank, which is one of the fossil banks. So you just have to look at the fine print and find out who is issuing that credit card. Is it that bank or credit union itself, or have they outsourced it? Okay, next slide. And also on Green America, and you'll get this link, that's a link to our credit card guide. We also have several credit card just options. If you need to look for a card outside your own bank or credit union, with Amalgamated Bank, Hope Credit Union, Beneficial State Bank. There are 2 banking organizations that are not associated with fossil fuels that issue a lot of credit card. One of them is called First National Bank of Omaha, FNBO, and that's in the upper left or upper right corner. Another one is the Independent Community Bankers of America, and they represent the small community banks. They are who issue the Green America credit card. Next slide, please. Okay, next up is property insurance. And your insurance company also matters. Next slide, please. So as I'm sure everyone is aware, there are more and more climate-related disasters happening because we continue to burn fossil fuels, and these will keep happening as long as we continue to do that, and they will keep getting worse. Last year had 27 of these climate disasters costing $1 billion or more. It was the costliest year on record, and it does not even include the LA wildfires, which were 2025, and those are being estimated to cost $250 billion, which is more by itself than was paid out all of last year. So insurance companies are the ones on the hook for this. They're not renewing policies in a lot of climate vulnerable states. They're leaving states, they're restricting coverage, and they're also raising rates on everybody, 35% within the last few years. Next slide. So, but insurance companies are not, guiltless in this. The big ones, all of them, almost all of them, insure fossil fuel projects. They also invest in fossil fuel companies. So taking these one at a time, fossil fuel companies, they can't do a fossil fuel project such as building a frac pad, building a gas plant, creating a pipeline, or an LNG export terminal. They can't do that unless they have insurance. Just like you can't get a mortgage on your, to buy a new home unless you have insurance. And yet a number of the big insurance companies are insuring these projects. Okay, so I live in Ohio. We recently had, not recently, 2 years ago, the state legislature passed a law mandating fracking of our state parks and public lands. And the number one funder of those fracking pads is JP Morgan Chase. So they are funding that. These that are listed here are some of the companies funding the LNG export terminals. So we're doing the fracking on the front end in the Appalachian region of Ohio and other areas of the Appalachian region. And then that gas, some of it will be going out to go out on the LNG export terminals in the Gulf South and causing a lot of pollution and environmental justice issues there. Liberty Mutual, which is listed here, is one of the worst, but all of them do this. And then on the investing side, when insurance companies collect our premiums, not all of them are paid out in claims. They also do a lot of investments, and they make a lot of money off of these investments. Big insurance companies are some of the major institutional investors in the country. So you can see in this chart how much they're investing. By far, Berkshire Hathaway invests the most. That's the parent of Geico. But State Farm is up there too. AIG, Nationwide, a lot of the big ones, almost all of them do this. Next slide, please. So Green America is a solutions-based organization, and we decided to create a resource people could use to find insurance companies that do not invest in fossil fuel companies and do not insure fossil fuel projects. Either do not at all or just a small amount. So we created our Climate Smart Insurance Directory. It's a state-by-state directory. There are options in every state. Some of the climate vulnerable states have fewer options because so many companies have left, like from California and Florida. But most of them everyone has at least 4. Many of them have more, like a dozen to up to 18 even in some states. We wanted to make sure they're financially viable, so they had to have an A rating and AM Best. We looked for insurance certificates. Those are not always public information, but where they were, we used that. And we got the investments data from a website called Investing in Climate Chaos. So you can use that directory to look for basically responsible insurance companies in your state. Next slide, please. And then we also always tell people, even if you have some options from our insurance directory, call up several independent insurance agents in your area, not agents that work for one company such as State Farm, but that work for several, and call 2 or 3 because they work for different companies. That will give you an idea of what is available in your state, in your area, and also ask for quotes. But what's mostly in our directory are regional mutual insurance companies. So again, just like with the banking and the banks and the credit unions, these are local and regional insurance companies. They don't have advertising budgets, so they're not household names, but they've been serving their community for decades, some over a century. And often you can save significant money from switching. So I personally switched from Liberty Mutual to a regional insurance company in my area called Grange, and I saved $700 a year. So that's something, and it's worth checking into. Next slide, please. Yep, so that is it from me, and we will add these links in the chat. Thanks so much.
Thank you, Kathy, so much. We're going to move to Leslie to talk about the investment side of greening your finances. I will also note that the questions are coming in, particularly for Kathy. So Kathy may be able to respond to some of those questions in the chat since she's now not presenting. And if not, we'll get to as many of them as we can during the Q&A section. So I will turn the mic over to Leslie to round out our presentation.
Thanks so much, Gigi. Hi, everyone. I'm Leslie Samuel Rich. I'm president of the Green Century Funds. Green Century has been doing environmentally responsible investing for almost 35 years. And we are one of the first families of fossil fuel-free mutual funds. We help investors make an impact in 3 ways. The first is by keeping your money out of environmentally dangerous industries, including coal, oil, and gas. The second is we lead a shareholder advocacy program that involves working with companies that we invest in to have them adopt stronger environmental policies, such as reducing the use of plastic or sourcing more clean energy. And the third way is supporting our nonprofits. We were founded by public health and environmental groups in 1991. And what that means is that all of our net profits belong back to those owners. They're called the Public Interest Research Groups, or the PIRGs. They're state-based organizations, and they run amazing campaigns to get states to adopt more renewable and clean energy, to reduce plastics, or even promote the ability to right to repair your stuff. And that's where I got my start right after college in the environmental field. On the next slide, I'm going to outline the 3 reasons that people are choosing to invest fossil fuel free. The first is probably a lot of what drew you here today, is that you want to have your investments reflect your values. If you care about climate change, which is probably everyone on this webinar, you may not want to financially support the industry that is causing our erratic weather and change to our climate. It's a straight out way to express your values. The second is to be part of a bigger movement and send a message. The fossil fuel free divestment movement is more than 10 years old. It includes individuals, colleges, hospitals, faith institutions, and more. By joining together, you send a message to the market and to fossil fuel companies, and inspire other people to act too. And the third is to avoid the potential financial and performance risks. And on the next slide, we're going to dive into that. So on this one, you can see a chart, and this slide shows how one index of stocks across 21 developed markets, the MSCI index, performs with and without fossil fuel exposure. The yellow line is the index, and the blue line is the same index of stocks minus fossil fuel companies. If you enlarge the screen, you can see that in some periods, there's very little difference in performance. Sometimes the original index performs better, but in other times, the index without fossil fuels does better. I have found this chart to be very useful for people to show their family members or financial advisors when they are trying to address the issue of performance, which is really the main myth that everyone has around fossil fuel-free investing. On the next slide, I'm going to go into a few more reasons to consider investing fossil fuel-free that are financially based. The first is because of something called stranded assets. Right now, if a fossil fuel company holds oil or coal reserves, for example, it appears as a positive or a plus on their company balance sheet. But if those companies are unable to extract or sell those reserves for reasons like changing demand, government regulation, lawsuits, or other things, they may be forced to prematurely write off those assets. That moves to the negative on the balance sheet, and those are called stranded assets. And those stranded assets can negatively affect a company's valuation or share price. We didn't think this would start happening for 20, 25 years, but we've already seen some fossil fuel companies doing that. The second consideration is performance. So the energy sector has underperformed the S&P 500 in 7 of the last 10 years. And according to the Institute for Energy Economics and Financial Analysis, that's a long one, it's also been one of the most volatile sectors in the 7 of the last 10 years. So we've got a lot of things going on with this industry. On the next slide, we're going to dive into how you can see if you hold and are investing in fossil fuels. First, you want to look at, if you're in a mutual fund or ETF, you want to look at the sector allocation. There's 13 sectors, and energy is one of them. What you want to see is a 0 in the energy sector. And to note, renewable energy gets counted in other sectors. So you don't worry about that one. The second is you can read the prospectus. That's the document that outlines how a fund is constructed. It has to say that is excluding coal, oil, or gas, or whatever else it might be excluding. Those are called screens. If a prospectus doesn't have that information, it means that the fund isn't structured to do that. And most likely, without you meaning to, but most mutual funds and ETFs do hold fossil fuels. The other places to look at is where all the places that you're investing. So there's your retirement plan at your company, there's IRAs, there's with your financial advisor. These are things that you can change one or you can change all of them. And so if we go to the next slide, I'm going to tell you how to do that and what to look for when you want to invest fossil fuel free. So first, in this prospectus, which honestly is like a long document, but you can read it if you want to and find this. It's called a screen or an exclusion. You want to see that it says that it actually eliminates coal, oil, and gas. Green Century has very extensive screens. So we eliminate exploration, extraction, refining, processing, and transmission of coal, oil, and gas. And that's in our prospectus, and it's across all of our mutual funds. The second, again, you go back to the 0%. You look at the sector allocation. You want to see that energy has 0% in it. You want to look beyond the name. Names are not highly regulated. And so there's been a lot of new products that might be misleading or confusing. So even if something is called sustainable or ESG, which stands for environmental, social, and governance, or green, that may or may not mean anything. So it might be an okay place to start, but you cannot rely on the name, unfortunately. And so that also includes funds or products that are called climate conscious, climate aware, carbon neutral, whatever it is, that those things are defined by the actual mutual fund company. And so they can decide what that means. And it may not line up with your definition of being fossil fuel free. All right. Then we want to talk about a little bit the different ways that you can invest. So there's mutual funds, which I mentioned. That's a collection of investments that pools money from many investors. And then that can be, a mutual fund can be invested in stocks or bonds, or with our Green Century Balanced Fund, a combination of both. That's like a one-stop investing option for people. They can be passive, which is following an underlying index, or they can be active, and that's where the manager is making more active trades on the stocks on a monthly or more frequent basis. When you have a mutual fund or you invest in a mutual fund, one of the I like to think advantages of it is that mutual funds can do that shareholder advocacy that I mentioned up front, and ETFs, which I'll talk about in a minute, can't do that. So for example, we have worked with Costco and really pressured them and got them to reduce their carbon emissions. We've also worked with a lot of toy manufacturers, for example, and gotten Disney to reduce the amount of plastics that they use. So you also could look for mutual funds that do this shareholder engagement and advocacy, and look for those that are successful in that pursuit. It's like another way to make an impact. Then there's exchange traded funds, or more commonly known as ETFs. They contain a variety of securities following an underlying index. Almost all the time, this is passive investing. They're traded throughout the 'the 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 usually do shareholder engagement, and they can't file something called a shareholder resolution. That's the question that appears on a proxy statement from companies, and usually they're questions about auditors and CEO compensation. But if negotiations are unsuccessful between an entity like Green Century and a company, we can put forth a shareholder resolution and have other shareholders take a look at it and vote on that. And then that gives us more leverage to negotiate with the company later. And then some of you may be invested in individual stocks. It's easy to figure out what sector they're in. If they're in the energy sector, you can always, sell them off or sell them off slowly so you get out of those options. So on the next slide, we just want to mention retirement accounts. It's that time of year when people are thinking about it a lot. So first, if you're working for a company or a firm, you may have a 401k or a 403b, and there are options within those. Not that many have fossil fuel-free options at the moment, is our experience, but you could talk to HR or someone at the company and ask for something like that. Sometimes also there's something called a back door in your retirement options, and you can get options that aren't among the several that are listed, and you could go through this back door and pick a fund that you wanted. You can start a traditional IRA, and traditional IRAs, the money you put in is not subject to being taxed at the time it's being invested, but it's taxed when you withdraw. Alternatively, you can start a Roth IRA. So you don't get any immediate tax deduction or credit now, but when you withdraw the money, it's tax-free. And people who anticipate being in higher tax brackets later on in their lives find that this might be the right option for them. On the next slide is how to get started. This is a guide that Green Century and Green America produced, and I'd encourage you to download this guide. It talks about some of the things I mentioned here and goes into a little bit more detail about how you can get started. So with that, hand it back to you, Gigi.
Great. Thank you so much, Leslie. We will turn things to Q&A. Can we go to the next slide for a second? Because we have to go back a slide for just a second, because we have to show that. And then from here, we will go to questions. The questions the panelists can see, but we have been getting a lot of them and answering a lot of them over the course of this presentation. But we'll also take some time to answer a few of your questions live. So I'll start first, Leslie, with you.
Okay.
Vanguard has an FTSE Social Index Fund, which uses SRI criteria, but many of the holdings are banks, JP Morgan Chase, Bank of America, for example, that invest in fossil fuels. So much BS and greenwashing. What is the answer?
Well, the answer is to pick your priorities and look for alternatives if you don't like this Vanguard option. If you're interested in investing fossil fuel free, my opinion is that the first thing is to not invest directly in the fossil fuel companies. So that's oil, gas, and even coal. And so that's what you want to look for in those criteria. If you want to continue on, you can look at the banks. I will say that it is hard to for big funds to invest in all regional banks or eliminate banks altogether, because then you're eliminating a whole sector that you want to have exposure to usually. I know for us that we hold a lot of regional banks, but also you want to be more practical. With the collapse of a regional bank a few years ago, you want to be only in them. So public markets, you can't be pure in entirely, but do the best you can.
Great, thanks. Tony, I'm going to pose this one to you. There were several questions that were posed from several different people about the environmental impacts of AI. So can you speak more generally to that?
Sure. Computing uses a lot of energy. This webinar uses some amount of electricity. And that energy use has been increasing in recent years. But a couple of things have happened in the last couple of years that have led to a great deal of concern about rising consumption of electricity. Both the increased use of cryptocurrency and crypto mining, and then more recently, the explosion of interest in artificial intelligence following the ChatGPT rollout a couple of years ago. The forecasts of what is likely to happen with energy use as AI increases are all over the map, from a dramatic increase tomorrow to a more modest trajectory of increases over time. And there's really, discerning which of those futures we are headed toward is very challenging. We did a report, which I had posted a link to in the chat earlier, called Big Data Centers, Big Problems, that raised the concern that anticipating serving this large and growing energy demand is leading utilities around the country actually to keep open some of their fossil fuel powered power plants that they had been intending to retire. And this is happening around the country, and it is slowing our transition to clean energy. The thing that we suggest in that report is to use tools to slow that growth of data center energy demand through energy efficiency, through demand response. So actually at times when the grid is the most stressed, to power down data centers, and through the on-site use of renewable energy at data center campuses. That doesn't solve the problem, but it does make the problem a smaller problem that we actually have the capacity to address through increases in clean energy and other strategies.
Great. Thanks so much, Tony. There have been a few, I'm going to take it again back to Leslie. There have been a bunch of questions in the chat about investing in alternative energy. So can you speak to investing in clean energy?
Sure. Investing in clean energy is a great way to show your support for clean energy. Some investment vehicles do include clean energy in the list of companies that they invest in. So that's one way to do it. There are also some mutual funds or ETFs that just invest in clean energy. I'm not allowed to give you financial advice directly about investing, but keep in mind that any fund that invests just in one of those 13 sectors, just relies on how that sector is doing. So you might not want to only have money in that.
Great,
That's
thank
my
you.
answer.
Okay, thank you. Kathy, a question to you. Are there similar issues to banks offering mortgages? Do many of the small or regional banks also support mortgage loans?
Yes, a lot of the small regional banks support mortgages, and some of them even have special programs. So Self-Help Credit Union, which is one that we mentioned, has a mortgage program that's really geared towards first-time mortgage borrowers and also people of color or people in low-income areas. And they take a lot of people on mortgages that the big banks won't take because they do things like they don't count student loans against you if you are on the income repayment plan, or they have other things that they look at, lower thresholds for a credit rating, for example. So definitely check out the banks in our bank map, which will be available tomorrow. It's not live yet; it'll be live tomorrow. But even check out other community banks and credit unions in your area, and find, just ask them, what kind of mortgage programs do you have, and what are the interest rates, and just go check into it.
Awesome. I think we'll stick with you for a second for another question. Is it possible to invest in a community development bank that makes microloans to underserved communities? I found they just wanted donations, not interest-bearing investments.
Yeah, so if you bank with a community development bank or credit union, I guess you could look at if they do a mortgage loan to a person in an underserved community that's like a microloan. you can take out, they offer CDs, they offer money markets, and those, produce interest and allow that bank to make those loans and produce interest for you. The ones that do microloans specifically in other countries, most of them that I've seen require a certain amount, like $3,000, or you have to be, there are other requirements. So that's not part of our Get a Better Bank map.
Great. Let's see, we'll go back to Leslie. So
Okay.
amazing to have such great panelists, and I'm popcorning back and forth between you because we have so many great questions. What an engaged group. So Leslie, can you talk a little bit more about the different Green Century Fund options? What is the difference between all 6 fund options?
Yes, of course. Green Century has 3 mutual funds. Each fund has 2 share classes, which means there's one for individuals. And then if you're over 250,000, you can use the institutional level. But they invest in the same things. All of them have extensive screens. So the fossil fuel screens I mentioned, plus screens on conventional weapons, nuclear energy, gambling, tobacco, and alcohol, as well as genetically modified organisms, or GMOs. We have one that's called the U.S. Equity Fund that has about 360 stocks and invests only in U.S. companies. We have another one, it's called the International Index, or MSCI International Index Fund, that invests in all developed countries except the US, so it doesn't overlap with our equity fund. And that has about 212 holdings. And then finally, we have the Green Century Balanced Fund that holds about 70 stocks and then bonds. And the cool thing about this one is that it is like a one-stop shop. So if you want to start an IRA, or for Earth Day, you want to open something for your grandkids or kids, you can make an investment in that. And now over 70% of the bonds are green or responsible bonds. And those directly fund projects like, clean energy projects around the world. They're all available, also, if I can, they're all available directly through our website. So you can go onto our website and open our account. That's greencentury.com. And you can also access them from platforms like Fidelity or Schwab, or all the other major platforms like Merrill Edge. And then finally, if you have a financial advisor, you can ask him or her to look up Green Century and consider an investment there.
Great, thank you. All right, I think we'll do 2 more quick questions. Next for Kathy. What if I have a rewards credit card with a big fossil bank? If I switch to a new card, will I lose the points, rewards, cashback I have racked up?
No, you won't lose those points. You probably want to just use those points or rewards before you were to cancel that card. And some people just don't cancel; they just stop using it and they just put it away in a drawer. Or you could cancel the card, but just use up the rewards and move to a new credit card.
Great. And then finally, for Leslie, from a financial advisor, can you address working with firms or advisors who specialize in ESG or socially responsible investing, especially in this political climate of challenges and removal of ESG labels?
Well, I think if you are looking to really dig into responsible investing, that it is worth your time to talk to a financial advisor who specializes in that. They know the field well. They know amongst, our competitors and colleagues, who does what. What's that screen? What's not that screen? They also, can usually offer broader financial planning, but there's a number of financial advisors out there that just specialize in that. People have asked, there's a list at the Green America website. There's a list on the USSIF, USSIF. And they're really experts in the field. So I'd highly encourage that if you are looking for a financial advisor. You can also ask if you have a financial advisor for some other reason you love and don't want to move, you can ask your investment advisor, you can just direct them to say, I want to do this. And honestly, if they're not responsive, which happens sometimes, they work for you. You also do have the power to move to one that does know this field more.
Great, thank you so much. That is all that we have time for today. If we didn't get to your question, please know that we will, off this webinar, try to get back to you with an answer to your question, because again, it was such an engaged group and we appreciate that so much. So thank you so much for taking the time to learn about how you can green your finances. Resources were mentioned throughout this presentation. We've dropped links to some of those things in the chat. Today's slide deck, as well as a recording of the webinar, will be made available to everybody. So we'll send out the slide deck, and we will also make the recording to the webinar available on both the Green Century and Green America websites in a few days. So just check the webinar or check the website of those two organizations for a recording, and then the slide deck will come as a follow-up. We really appreciate your participation here at the start of Earth Month and on April Fool's Day. This is no joking matter. The planet needs all of us doing all that we can for the environment every day. And we appreciate you taking your lunch hour to spend it here with us. Thanks so much.